Lloyd was a great risk manager, probably one of the best in the business over the last 10 years. And, David Solomon's a lot of things. He's got a lot of experience. He's an investment banker, high-yield junk bond salesman, underwriter. He's an investment banker through and through, but he's also got his pulse on the capital markets. He's not a trader like Lloyd. He's probably not as expert in risk management as Lloyd. And you know what? I think that's probably right because, as Mike Mayo, I'm sure, can talk about, Goldman Sachs is evolving into a commercial bank. The days of the great investment bank are probably over. Goldman Sachs has, been for 10 years now a bank holding company, and it's going to have to live by the rules of commercial banking. And so probably the skills that David Solomon brings are exactly what's needed at this moment, and that's probably why Lloyd Blankfein recommended him and why the board of directors went with him.
Mike, before we talk about the future, I just want to talk about the past and about Lloyd. And I spoke to Jamie Dimon earlier to get his take on this. He said, "My hat's off to Lloyd. He's led his extraordinary firm for over 12 years, seeing it through the darkest days of the financial crisis and helping it emerge stronger than ever. Lloyd is a friend of mine. I congratulated him early this morning." Mike, mention there from Jamie Dimon about Lloyd's guiding Goldman Sachs through the financial crisis. Was that his greatest achievement? And overall, for his 12 years, how do you rate his tenure?
Lloyd Blankfein did a fabulous job at Goldman Sachs. The stock price outperformed the bank index over that time. Goldman Sachs performed tremendously during the financial crisis, and Goldman's had among the best returns in the banking industry. Having said that, it was not perfect. Goldman was a little late to pivot its strategy away from its legacy strengths. They didn't pivot until about 2 years ago. For the last 5 years, Goldman has had worst-in-class trading results, and also Goldman was slow to manage its external reputation outside of its core clients. On balance, he did a very strong job, even if it wasn't perfect. The challenge for the incoming CEO, David Solomon, is to facilitate that strategic pivot, to diversify the revenue stream, to continue the efficiency savings, and to make sure they have the right talent in the right spots.
William, we always talk about Goldman Sachs having a deep bench, and David Solomon, we've talked about his attributes, and he certainly has plenty and is taking that role. What about the level below? Do they still have the best people at Goldman Sachs? Do they still attract the best people throughout the company?
I think they do, Will. I've said this a bunch of times. It's harder to get a job at Goldman Sachs than it is to get into Harvard and Stanford. So they still have their pick of the litter, so to speak. What I think the interesting thing is, David Solomon was a Bear Stearns partner, head of investment banking at Bear Stearns before he left to Goldman Sachs in 1999. John Waldron, who's now head of investment banking at Goldman Sachs, worked with him at Bear Stearns. So I don't know, these Bear Stearns guys have a way of getting around, a way of landing on their feet, a way of succeeding. So is this a Bear Stearns takeover of Goldman Sachs? I don't know, but it is kind of interesting. And on the fixed side, Pablo Salome left pretty immediately. Others have left pretty immediately when David Solomon was elevated in March. I think that's an open question. But of course they have a deep bench. They pride themselves on the best and the brightest and training the best and the brightest. And if they don't have them, they'll go get them, which is a bit of a revolution at Goldman Sachs from the old days. They'll find them, and they'll be just fine. The question is, and again, I think Mike can probably speak to this better than I can, is I think the days of risk-taking in investment banking are over. They are morphing into a commercial bank. And that's why, David Solomon built the Goldman loan book from 30 billion, corporate loan book, to 30 billion to 100 billion. That's been a moneymaker for Goldman. He's talking about cash management. He's talking about old-fashioned commercial banking products. And I'm sure they'd love to buy a big balance sheet if they could, too, if the Fed would ever let them.
So, Mike, I guess from an investor point of view, they're not back to the profitability, right? Pre-financial crisis.
And they won't be because of, reduced leverage and all the rest of it. I do think the question is, this evolution, as well managed as it has been, does Goldman have a lesser edge in this new mix of business than it did, obviously, when it was just more of a trading engine? Investment banking, of course, the franchise remains there. It's unmoving. However, investment management which of course is kind of this sort of stealth large business at Goldman Sachs, rivals investment banking in terms of revenue on a quarter-to-quarter basis. So it's kind of interesting there that it's a different mix of businesses, Mike. So either that's more stable and worth more, or is it away from Goldman's core edge?
Well, let's pull the lens back. We're bullish on Goldman Sachs shares, as you pointed out. The stock has underperformed, but the results the first half of this year and the second quarter were strong. They exceeded on revenues, expenses, and earnings.
Why is the stock down today then?
Well, we would have liked to have heard from David Solomon. So despite the financial outperformance, there's still some strategic questions, as you're bringing up on this show. And while the CFO today said nothing's really changing too much, there's still the potential for some tweaking, some reallocation of capital. But pull the lens back. All decade long, Goldman has streamlined the infrastructure. Now Goldman is layering on revenues at lower marginal cost. The incremental profit margin at Goldman this quarter versus a year ago, 50%. That's incredible. I don't think people are looking at profit margins at banks the way they should. 50% incremental profit margin, that's relative to a 35% stated profit margin. That's the big picture. And as long as David Solomon gets the firm to work together and they can build best-in-class relationships with the top of the house at corporations to get more business at the bottom, the mid part of the house at corporations, then they can get more revenues, which we think they will.
And Lloyd didn't do the earnings calls. So you think David Solomon should do them moving forward?
Well, Goldman is the only one of the 10 largest banks that never has its CEO on the earnings call. And so it'd be nice to hear what is the strategy of the new CEO at Goldman Sachs. Don't leave that as an open question. We think if he was on the call today, the stock would have headed higher. We still think Goldman Sachs should do this call sooner than rather than later.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.